And welcome to the Tearsheet podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. And corporate treasury has become more complex than ever. Businesses are drowning in manual processes and fragmented systems, unable to get a clear real-time picture of their own liquidity. The pressure is on, but legacy banking systems are struggling to keep up. So what's the solution? Here to answer today are two leaders that are actively building the future of finance. We have Bennie Pennington, head of embedded banking at KeyBank, and Patricia Montesi, CEO of Qolo. Together, they launched a real-time virtual account platform that's delivering measurable results for clients. And Patricia, we'll start with you. Love to get the big picture. The world of corporate treasury is facing pressure. It's something we report all the time on at Tearsheet. Patricia, can you help set the stage for us? What are some of the core challenges you're seeing in the market?
Sure, happy to do so. Zach, thanks for having me. Benny, always nice to see you. In today's world, corporate treasury, think of it as this intricate web of systems, operations, and multiple suppliers. If you have global operations, you're running multiple payment rails, you're experiencing increased regulatory pressure and a constant expectation in today's world of sort of instant gratification and instant data. Understanding where your money is in real time at any given point in time and what your position is really critical to the corporate treasurer of today. Unfortunately, most banks today are still operating on a treasury system from yesterday. So legacy systems, think batch files, manual reconciliation, and this visibility that takes a small army to actually bring together and unify. Read in a recent report from Celent that over 60% of mid-sized U.S. banks would love to disrupt and modernize their treasury, but they cite legacy cores as one of the biggest barriers in order for them to accomplish that. That's where folks like Qolo come in. That's where the gap that virtual account management fills for these banks. It essentially allows you to not have to rip and replace your core. And it's a modern real-time layer of control that sits above the core banking system. And all of a sudden you go from this legacy antiquated system to real-time account opening, money movement, flexibility, complex hierarchies are no problem. So it really helps set the stage of modernization without the giant disruption of ripping and replacing a core.
How about you, Benny? Are you hearing something similar to your clients at KeyBank?
Certainly, yeah. So at KeyBank, we work with clients of all sizes, but my division, we focus on clients primarily mid-market and above. So mid-market, it's institutional, and they're feeling these pain points quite a bit, as are all clients. But, as we were doing interviews with a lot of our commercial clients, specifically in a couple segments in real estate, in software and technology, and a couple of different verticals, they told us some of their biggest pain points were being able to see their balances. How they can make sure when they've got dozens of accounts with us, and a lot of times that they can see all of those consolidated or separated. How do they get the real-time information? How do they separate intraday from previous day? How do certain specific payment rails adjust the timing of, when payments happen? And how do they take all this data and get it into another system or get additional data into this system? So yeah, we heard this from a lot of different clients in our commercial space, that being able to see this real-time data and see the data about payments and be able to transform it and move it back and forth between different softwares was really a problem for them that they wanted the bank to be able to solve, for them to have a better interaction with the bank.
So if we could double click on that, Benny. So KeyBank, and you and your team identified this problem. What did you do next? How did you go about identifying a partner to help address this issue?
Sure. So we first mapped out from a lot of meetings with the clients what the clients' needs were. Exactly, what are they trying to solve for? We looked at some RFPs that we had lost. We did a lot of different client interviews, and we identified a lot of potential things that we could bring to market to make it easier for KeyBank to work with these clients. And then we sort those out. Okay, well, what's the most difficult to achieve versus the easiest? Which one has the biggest, tangible result to the client? What's a different opportunity for the bank? And we zeroed in as virtual account management as a solution that we thought would solve the broadest set of problems for the broadest set of clients. So then it was about finding the right partner. And so we issued an RFI where we wrote out a series of different requirements and a lot of different goals that we had and timelines and all that. And we evaluated it across a number of partners. And ultimately, Qolo came out number one from their ability to deliver quickly, from the level of sophistication of their APIs, and from meeting the team and the ability for us to interact and feel like we had a true partner. It was obvious that Qolo was going to be the right solution for us to work with to be able to bring this to market.
Really appreciate those kind words, Benny. And I think the feeling is mutual from the Qolo perspective. I think, looking back at KeyBank's history and their leadership position in the commercial side of banking and always sort of being punching well above their weight. They had tons of years of experience working with fintechs, et cetera. So they were, I think, a unique client for us to partner with. I think from our side, we ended up meeting them where they were. They understood where they wanted to go. And then we collectively built the roadmap together and solved the pain points that Benny talked about that all of his clients and et cetera were seeing. And, don't forget out there in the corporate treasurer world, there are, other options. If you're a commercial banker and you're not providing these new modern options, they're going to look elsewhere, either in a much larger bank or a non-bank that comes out and says, oh, I can do all of these things for you around the perimeter of your commercial bank. So I think KeyBank actually very much strategically knew where they wanted to go, knew what they wanted. We respected the fact that they didn't want to rip out their core. It is, not just a technical undertaking of ripping out a core. It's really all of the decades of process that's also been built around it. Really important processes like compliance and risk, et cetera. So we were able to have that sort of win-win solution where it's like, you don't need to do that. We respect the process. We understand all of the compliance and banking aspects, and we are able to overlay and give you exactly what you need. So we were able to modernize without disruption. And then I think, our partnership, as we launched, as we see it grow, as we see it scale, it doesn't feel like their solution, KeyBank's solution. It feels like our strategy. It feels like we're solving pain points together and we are disrupting the commercial treasurer side of things in the banking world. So it's worked really well. We continue to grow. But I think it's all about amplifying what KeyBank was already strong at. And again, the leadership position that they take on the commercial side, this is just, one more arrow in their quiver of thinking ahead, thinking strategically, and being innovative.
And Patricia, if I could just double or piggyback on a few things that you said there about the partnership and the joint roadmap and building something together. We saw a lot of great technology building blocks in what Qolo had done, especially with some of the card issuing elements. And we saw the ability to leverage a lot of that technology to solve the challenges our clients were having. And we brought a lot of challenges to Qolo and said, hey, how can we adapt your software a little bit? How do we build on top of it together? And it really was a good collaboration. We brought them a couple customer requirements because we did want to do some things different than some of the other banks, so that we had a point of competitive differentiation and solving some pain points that we saw that a lot of other banks couldn't solve. And some of our interviews with clients, we heard clients talking about the lack of real-time building of virtual accounts or the lack of real-time visibility. And then also from some of the compliance elements that Patricia was talking about, we said, well, hey, our bank, we need to make sure we do our OFAC checks this way. So can you give us this custom file? And so there was a little bit of tweaking and customization, and Qolo was very flexible in building something that was unique to how our clients wanted to use the solution. And to me, that was a real partnership.
One of the things we try to do at Tearsheet is go beyond press releases and conversations about new product launches and really see about, it's exactly what you guys gave us, like sort of behind the scenes, what it took to make a good product and a good partnership. I'm curious about, proof of concept and proof how it works. So you're 1 year into the relationship. Are there, Benny, are there certain things you can point to about the impact that this partnership has had on your client base? Absolutely.
So to date, we've onboarded over 7 different clients. And what I like is there's 7 different use cases. It's not the same thing every time. And we've run over $40 billion of transaction volume through the platform of clients using this new technology to settle their reconciliation and their payables. So we've got clients that are in healthcare that are doing this for claims payments. We have energy trading companies that are doing this just to separate out their different funds from their different business units. We've also got another large financial institution that wants to be able to use this technology to be able to better settle, additional funds and do additional ledgering in a digital way for their clients. So yeah, we've definitely seen an impact. We've had clients tell us that they're able to open and close accounts faster than they have been with any other bank. And we've had clients tell us that they're able to get better real-time visibility as they're using APIs from multiple different softwares to pull into their banking and back and forth, that this was a better solution that they've had. And then we had another client say that, they evaluated a lot of different bank options for virtual accounts, and ours allowed them the fastest real-time creation and closing of sub-accounts in a way that was completely digital that they haven't seen from others. And so, yes, we're telling clients, say, that this is, transformative for their business, and our pipelines continue to grow as we're doing our implementations.
Patricia, I'm curious. Please go ahead.
No, sorry. I just wanted to piggyback on Benny's point, right? I think we continue to collaborate and learn as we evolve this. We've been live for just under a year. What we're proving is scalability, right? We have moved billions of dollars in the system, but what we're also more importantly proving is that we are solving true pain points for their commercial clients and their corporate treasurers. And I think KeyBank had the vision, frankly, of increasing deposits, increasing customer service for your commercial clients. It really does start at the core, right? And I think innovating around a legacy core in the way that we did with virtual account management, it actually lays this foundation of actually leaping forward and solving some additional problems that we now have built and can extend out to solve. So think extending not just managing treasury in a more efficient way. Now we can extend that out to virtual cards, programmatic funding, embedded payments. So the data and automation from VAM are now the foundation layer for new products like integrated spend or liquidity. So I think that original vision of, where do I start? A lot of people start around the perimeter of their legacy core. I loved what KeyBank did. It sort of, I think, defines how we went to market in terms of the success of supporting a number of use cases, is we started at the foundation layer.
So, Benny, I want to kick it back over to you. How are you thinking about the future of KeyBank's VAM platform?
Sure. Well, the next big thing on our roadmap, it shows the partnership between Patricia and I, because we're looking at the same item, and it's about our virtual card issuance. So when we launched, we had a couple payment rails, some of the core digital ones of ACH, Wire, and RTP. And now we're adding virtual card issuance as a different capability. So if you've got a client, they need to send a one-off payment to one of their clients, they can click a button in the same interface that they would use for their other payments and be able to push that out onto a virtual card with a variety of different uses and use cases there. And then we're looking at some of the other legacy payment rails. How do we take such a manual process as check processing and digitize it and allow it to be used in virtual cards? And same with or virtual accounts, and same with Lockbox and a few other things. And then we've got some other UI enhancements coming. How do we make it easier for clients to be able to do multiple secondary functions around, remittance data and, some of the more ACH workflows? How do we allow them to do all that in the digital tool? So all that's coming on our roadmap here in 2026.
So, Patricia, how do you see this trend of convergence playing out across the industry?
Yeah, I mean, I think what Benny points to again is, once you lay the foundation with this dynamic programmable ledger, your treasury experience obviously is modernized and solving pain points for customers, but you can also, again, extend that out and add adjacencies, whether it's a card, a wallet, or, an embedded use case. So KeyBank is equipped now to, continue to be in front of the market and provide innovative solutions to their commercial bankers. We consider VAM to sort of be this connective tissue, if you will. And once you have all of that in place, it supports all of these complex hierarchies. And I think what we've learned together is that there was a dozen or more use cases that we set out to solve for. And the power of the design of the platform for VAM is that it doesn't take much to support these different types of use cases. I think what's been interesting is that there's some things we never even thought about that pop up and say, oh, here's another use case. So I think we continue to, again, leverage the fact that we built this foundation in a modern way, and how do we continue to extend it and improve the experience for the corporate treasurer to add additional capabilities in and adapt to the market demands.
Yeah, it's clear you both are passionate about serving the needs of corporate treasurers. We've covered a lot of ground in this conversation. I'd like to wrap it up with each of you getting a chance to share a final takeaway. Benny, let's start with you. What's your message for business owners listening today?
Sure. If you're a business and you're having difficulty managing tens or dozens or sometimes hundreds of accounts and you want to do something digitally, virtual accounts is something to look at to maybe streamline your operations and consolidate it. If you're a business that's struggling with real-time cash visibility or understanding all your data, or how do you reconcile payments from a variety of different payers, or segregating funds, or if you're a client that just is looking for a better way to hold your client's funds and get visibility into it, look at virtual account management. It's a solution that'll help solve all of those pain points and allow for faster money movement in a variety of different scenarios. And it's just one of a variety of different solutions that we've got in our embedded banking business here at KeyBank, where we've got a team of over a dozen individuals who wake up every day just focused on how do we use software to make our commercial clients' payment operations and treasury operations easier. And we'd love to talk to any clients that are facing any of those challenges.
And Patricia, how about you? What are your messages for banks listening in?
Yeah, absolutely. I mean, every bank is looking for ways to modernize and minimize the disruption that comes with that modernization. Virtual account management is the answer. I believe that we are proving that out with KeyBank, that we can modernize without ripping and replacing, and we are now showing that we can do it at scale, securely and profitably, and most importantly, really giving the commercial and corporate treasurers exactly what they need to have that comfort of the unification of all of their accounts and a real-time view of what my cash position is. That's absolutely critical. And I would say to all those 60% of the banks that look at the legacy core as a barrier, start checking out virtual account management, because it doesn't have to be the barrier. We can get you live in market with a modern solution with less disruption.
Patricia, Benny, thanks for joining us on the Tearsheet podcast today.
Thanks so much, Zach.